it is going to be a hard journey. And so I think that you can't be too precious about it. There's going to get bumps and bruises along the way. That's just part of that journey. So you have to just suck it up and be ready to listen and learn through the process. The valuation is not the success, right? No. It's just a process of raising capital. And somebody said, at this moment in time, we're putting a value on your company of this.
Welcome to the Proud Talk. I'm Tracy Hill, and this is my guest, Philip Green. Do you mind Philip or Phil? What's the preferred?
I can do either.
Okay, good. Awesome. He's open-minded. So today we are talking about future trends, investments, tech, crypto, like all the great stuff. So I suppose a bit about you first, maybe. You've been the CFO of Amazon, Groupon, Deliveroo.
Yep.
Like, that's pretty impressive. And they're all brands that have grown really, really, really quickly. I think Deliveroo was one of the fastest growing companies of this time.
It was the fastest by Deloitte's measurement anyway.
Really?
Yeah. In the 20 years they'd been doing their fast growth companies, it's the first time a US company didn't win globally, and the fastest growing company ever.
Wow.
So yeah, it's pretty fast.
So Will's a happy boy.
I think, I'm sure he is a happy boy, right? I'm sure he has his moments of being happy and sad, but yeah, I think on balance, you can't not be happy when you start out with an idea and you build a company that's, that gives a lot of jobs, a lot of happiness, right? How many times have you sat on this sofa and enjoyed, what Will's produced?
Absolutely, many times. Too many, Will. Too many. So, I'm broke. I'm broke from delivery food. Yeah. So when they started, was that backed by investors or did Will back himself?
Both is the answer, yeah.
Okay.
So, yeah, but I think so. I joined, by the time I joined the business, they'd already gone through their Series C funding. So they'd gone through a bunch of fund rounds. But I think people get caught up on fundraising. And I think
it's quite complex, right, to understand. I do anyway. I'm like, fund seed, pre-seed, A, B, C.
Yes. Yeah, and I think the key thing as well is the most important thing is how much capital do you need to build your vision. And I think that's what you're really doing. You're trying to raise capital to build a vision.
Okay.
And so some businesses need a lot more money.
Yeah.
So if it's a hardware business and you're building physical product, you need a lot of cash. If you're making an entirely new market, which is intensive, like a Deliveroo, you need a lot of capital.
Yeah.
If you're doing a software business, quite often you don't need quite the same capital to get the thing going. So
what about if you did a talk show? Podcast?
Well, I mean, the amount you're paying the guests, I think you need a lot of capital.
I'm not paying my guests. Don't listen to him.
Yeah. So and it's the joy is that I think seeing people bootstrap a business is really interesting. And I think there's somewhere it depends on how fast the market's going to get crowded. So there's big buzz now around a lot of companies buying up Amazon sellers.
Yes, I've seen this. Yeah.
Now that's a high capital intensive business because you're acquiring companies and rolling them up. So you need a lot of capital. Obviously, people are raising a lot of debt to do it. Yeah. But you're right. But you get into this land grab mentality where I have to get out the gate fast and be big fast.
Yeah.
I think if you're building a talk show, it's about getting audience and getting people out there. So firstly, good content matters.
Yeah.
And then getting eyeballs on the good content. So you can spend a lot of money, but if the content's not right, it doesn't really matter.
Yeah, not ideal, is it? If the content's bad. So deliver on this talk.
I'm trying. I'll give it my best shot.
Now, one thing, I was on Twitter the other day. This guy, 4 years ago, flipping burgers. I can't remember what burger joint, irrelevant. But he'd been doing that forever. He'd invested in some crypto and 3-4 years later was driving a Tesla and loving life.
Yeah.
Now, every time I put something out on any social media platform, does anyone really know where to invest, what to do? Everyone's like, I actually don't have a fucking clue what they're doing. So can you talk to me a bit about, or explain it in simpleton terms, what Bitcoin, crypto, NFT is these?
I can give it a go. So first, I've avoided doing anything related to cryptocurrencies.
Okay.
And I think that the summary I look at is it's a bit like investing in the standard currency. Like I don't try and bet on which way the dollar's going to go. I don't try and bet on sterling, and I don't play foreign exchange markets. And so when I look at all the cryptocurrencies, and they're highly volatile. So I've looked at it and said, well, if I don't bet on the dollar, why would I decide to bet on Bitcoin or Ethereum or any other of the coins that are going? And they're just so volatile. So I don't know what information I can gauge to say, well, in the short term, which direction it's going.
Yeah.
I also don't personally find it a huge amount of fun to try and just gamble on the direction of travel of these things. But I do think that if you look at, certainly in the midterm, you've seen that the values have moved around so much, but generally the direction has been up.
Yeah.
Is that going to maintain? If you believe a lot of literature, the answer is yes. There's still an up to the right kind of movement here.
Yeah.
I think my view is just a space where I've said I don't want to get involved in that kind of market. I prefer to get involved in things where it's a bit more tangible.
Okay.
And I can see that the technology is doing good.
Yeah.
Now, so that's my view on the crypto, which essentially is just a new version of a currency.
Yeah. And I think though I don't know how long banks as we know it will be around for much longer.
Yes.
I think that mostly everything will be online really. I think that middleman will be cut out quite quickly. Do you agree? What are your thoughts there?
It's it's one of those things which has been interesting going through raising money is that I think strangely as you get more and more successful or bigger, the importance of banks and lawyers generally increases, not decreases.
Yeah. Okay.
And I think that underpinning the banks still underpin so much. I think that whether the bank's names are still the same, I think the concept and the function that banks provide, I think will still be there. There'll still need people who need access to capital. You'll still need some regulations around that capital. I don't think that. So I think the question of what won't change, I think that those things won't change.
Okay.
And so that's a service that's provided by banks, and you could rebrand the bank as something else, but you'll still need that service.
Okay. So what are the types of thing that you invest in that you, I suppose, one, enjoy? Because I think if you're going to invest in something, you've also got to enjoy investing in that.
Yes.
And what would you see the most return on?
It's very good questions, right? So I think the first one, what do? The first is people.
Okay.
I think fundamentally you're investing in people. And I always say I think I probably have the worst investment thesis.
Really?
If I was looking at it because I think I don't start with a financial thesis.
Okay.
It's more around, and that's the question of measure of success. So my view is if I start with the people, are these people that I like what they're doing? I'd be happy if they were employing people, and I would like to see them be successful. And so if I can answer the question to those things, then it's like, okay, well, that's the first box is I'd be okay supporting you guys.
Yeah.
I just think that that they will do some good with the money that they're given.
Yeah.
Then the second thing is actually, do I think I can add value? I don't have the capital where you go, actually, you can change it just by sheer capital. And so then you get into the question of, well, can I add some value to the team that I'm working with? And that might be, it might be one message, it might be one post, it might be just, introducing them to one person. But the question is, can I add some value to that team?
Yeah.
And again, if the answer is no, then you just become pretty dumb capital. And if you're dumb capital, then you're just the dollars behind it. And there's definitely better dollars out there than mine in terms of size and scale and what they can do with it. So I like to be able to add value.
Okay.
And then I like to learn. So can I learn something from it? And I think the learning piece is that if the money goes to zero, that's almost, well, again, did I get something from it? Did I learn something from it? And so if you look at it that way, then all you're really doing is investing in your education. You're investing in somebody you like and want to see successful. And if there's a financial upside at the end of it, then great. But that's the last part of it.
Yeah. No, I like
so
that.
Basically, don't follow me on investments.
There we go. Don't follow Phil.
No.
All good. And with the brands that you've worked with, have you invested in those companies, stocks, shares, anything like that, or?
I think investment. I think there's two ways to invest. One is through your own cash. One is your time. I think we're too light at saying what the value of time is because we've not been taught how to put a price on time, which is strangely the most important commodity we have is time. So I've definitely invested a lot of time in the things that I've done. I've stayed long on things I've been involved with. If I believe in it, then why would you take your money out early?
Yeah.
And so I've always said that actually, if I believe in it, then stay as long as you can.
Okay.
I think that's the view. I also think that if you're investing in something, it's better to invest in things that you understand and know, because you've got that information that you can get a general good feeling for what you're investing in, versus just picking a stock off the market and saying, oh, I kind of like this one.
Yeah.
But what do you actually know about that business, about how it's run? Yeah.
I just think there's so many things now. There's so many things out there that you can invest in. And then, Bitcoin, crypto, and now NFT. And and you said you'd invested in. Have you invested in NFT?
Got involved in an NFC business, yeah.
Okay.
Yeah, which is different because I think when I look at some like a non-fungible token, it's what I haven't done is I haven't gone out and bought a piece of art and said I'm buying a piece of art and this is something that I'm investing in, and a way of doing investment through a piece of art, or whether it's buying wines and then putting them into seller.
Yeah.
And I think NFT is one of those where I've looked at it and said, I scratch my brain and go, I'm not a digital native. So as a concept, I look at it and go, well, these digital assets that you're backing and being able to track, I'm not sure I'm the best person to kind of explain it. But what I recognize is that there's a new technology coming. There's a lot of excitement around it. There are use cases for it. And so whilst I sit there and go, I don't know why somebody would necessarily buy this.
Yeah.
That's also true of certain like clothes. I mean, I'm not a very fashionable person, so
what, you look great, Phil.
Thank you. Yeah. There's people who spend a lot of money on fashion. Just because I don't understand it doesn't mean I can't recognize it exists. And when I go back to investing in something because you can learn, I think it's a space where you say, well, absolutely, this is a new space. Let's get involved in it.
Yeah.
I'm getting involved with a team of people that I have a lot of respect for. And therefore, it's like, great, let's go and do this because it's an education.
Yeah, definitely.
And I bring something different to the team than just the knowledge around the blockchain and how we're going to go and build that. So it works very well because ultimately, what you're doing is you're building a team that can try and be successful. So not everybody has to be an expert in every area.
And I think you've said it quite a few times now, is that word team. And I think that's really important, isn't it? With anything you do.
Yeah.
Wherever you start, having a good team around you, a good team of people to support you and have your vision. Yeah. Yeah.
Well, I think firstly, like doing it on your own, I think generally is harder.
Yeah.
Unless you pick the wrong team, which is obviously good. That's a selection process. But I think that it's also less fun.
Yeah.
I think that working with people that will challenge you, that will stretch you in different ways, that will give you different perspectives. We talk a lot about diversity, and it's a word that keeps on creeping in more. And I think that diversity of thought and opinion and interest is so important in anything you're doing. And certainly some of the things that I've got a good buddy of mine, and some of the investments I've looked at, and he looks at me and goes, I don't know why you're doing that.
Oh, really?
And it's what I believe in it, right? And I think that fundamentally I believe in it, and I think time horizons matter. There are some things that if you can flip things around pretty quickly and be successful, you could bet on the stock market today and it might go up, might go down, and it might be a quick win. There's other things where you say, well, this is just, I'm going to go for this, and it might take 10 years, it might take 15 years. But you're in and you're happy with it.
Yeah. Where do you think there's going to be more Deliveroos? Do you think there's going to be more Amazons? I mean, I don't know how you even compete there. But where do you think that future is going? Do you think there'll be no stores for retail soon and everything we buy is online, or?
No, I remember sitting at so firstly, I think history's always told us that the companies come and go.
Yeah.
And that's just, it's always been that way, right? As much as you track back the cycle times of the Fortune 500 companies or the FTSE 100, they just cycle through. So I've got no reason to believe that that won't continue to happen in the future. Companies, it's really hard to not become lazy as an organization. Especially like to turn up every day when you keep on winning gold medals. And then to keep yourself motivated to win one more, it's really hard, and to turn up every day and train. And so for a company to stay at the top for that long, and keep people motivated to stay there, and keep on, but also still be connected to what's up and coming, what's happening. It's incredibly hard.
So tough.
Yeah. I look at, Amazon's only not even 30 years old yet as a company. So you start saying it's still actually a baby in company terms. So I do think that the companies are going to be around for a while, but that's not without risk that they're going to get, somebody else is going to come up and beat them to the punch on something else. Technology is changing incredibly fast.
So fast.
Yeah. You look at like Shopify, Shopify now, it's like, they've got more sellers than Amazon is using their platform. So you already say, well, wait a minute, that's surely a threat to Amazon as a business. Deliveroo, in terms of the delivery market, is actually one of the smaller players by market cap. So you look at, there are already multiple delivery players, and then there's so many guys. GoPuff have entered, the UK market on the delivery side for doing groceries. And there's a lot of money going into those spaces. So there's always going to be people, if there's capital available, people look at a space and say, I want to be involved. And I think the way I always looked at it is the winners are the ones that wake up every day thinking, how to make it better for customers? How do I avoid the company becoming fat and lazy, and staying connected and working really hard for the customer? So I think, you've got to stay current.
Yeah, definitely. And if you were starting out as a Wilshu, or if I was, or anyone else that's watching, what is your advice there for starting but also gaining investment, and where to go to get that?
I think one, recognize that you're going to have to go to a lot of people. I think you're going to get a lot of no's. I think that you are going to get a lot of people who just, for whatever reason, they don't see the vision that you're selling them. They may be conflicted in certain ways, and therefore they can't do it. They don't think the timing's right. They don't think you're the right person to lead it. You're going to get a whole bunch of no's. So I think working on that basis, it's going to be a journey. It's going to take a lot of time. It is going to be a bit of a numbers game. And I think that you've got to get to the point where it's not personal. People have different motivations, right? It's that's the most important thing for you, is your company, what you're building, but it's one of many things that other people are doing.
Exactly.
And therefore you can't take their decision personally. You've just got to say, you know what, if it's not a fit, it's not a fit. What you need to be open to is that the feedback you're getting. And I think that firstly, listen to it. You can then choose what you do about it.
It's really difficult, right, as well, I think some people can take it as constructive or non-constructive criticism, and their opinion you might think is not right. But I think you're right. You have to be open to really listening. And also questioning back at the same time to understand why they feel that way. But I suppose not everyone's going to say yes. Lots of people do say no, and that's okay.
There's been some businesses I've looked at, and actually certainly two spring to mind most vividly. But one of them more recently, and we looked at the visions. They actually like what you guys are doing, like the idea behind it, but the approach doesn't really work, right? Think you're missing some things. And we had a long conversation and back and forth, and in the end they've stuck to their original plan, and that's completely fine. But it's like, that's a plan that I can't back. Doesn't mean that I can't back them. I think I wish them all the success. But it's not, and fundamentally you've got to trust, you've got to back yourself, that you know you're going down the right path, and be willing to change your mind as well, right? That if somebody challenges you on something, don't stick to your decision just because, well, that's how you walked in the room. Take the challenge and say, okay, on reflection, does what I believe before this meeting still make sense? Because the answer might be, you know what, actually, the information that I got was great, and I'm gonna make a slight adjustment. It might be that you say, no, I still believe I'm right under that challenge, and then just march ahead. And it doesn't matter, right? In the end, it's worse to try and build somebody else's vision for your company than build your own.
Okay. So what have you enjoyed most about the companies you've worked in? Because they've all been tech companies, really, haven't they?
Yeah.
They can all be classed as tech.
Yeah, in one way or another. Yeah.
Yeah.
Exactly, yeah.
And
Although which company can't today, right? I think is
I know,
yeah.
that's very true.
Yes.
What have you enjoyed most within those, though? Especially, I suppose, well, I think, did you start with in Groupon where it was quite a young company as well?
No, Groupon was much lower. I mean, Groupon had already IPO'd when I got involved.
okay.
So, but it's fascinating. But Groupon's a really interesting one, right? Because a lot of people talk about Groupon as like, oh, are they still around? Are they still going?
They're definitely still around and
Yeah,
going, aren't they?
and I think people forget that no matter how you carve it up, Groupon's a company with and markets move, but close to now still close to $1 billion valuation. It's a company that's been a unicorn, is still markets move up and down, but still essentially a unicorn business.
Yeah.
That sounds like success to me. No matter how it's moved up and down, it's still most companies would dream of getting to a listed valuation of $1 billion, right?
Yeah.
And the number of people imployed. So I think we strangely set our expectations in some of the wrong ways. It's for one, it is a successful business.
Yeah.
It had moments of being valued more, yes, valued less, absolutely, but it's still a successful company. It's still going. It's still got capital. And I think on the enjoyment side of it, the enjoyment is when you start to see things really just clicking in. I think that it's that moment where you start to see the hard work that people have put in, the time, the conversations.
Yeah.
You start to see those things just starting to click in, and you start to see that traction happening. Because you start to see the confidence shifts, and people start believing that actually this is now going somewhere. It's never about it's never really about the valuation that somebody else puts on the company or the fundraise. I think they're important parts of the journey.
Yeah.
But fundamentally, it's when you start seeing those things clicking in. And you start seeing people really re-engaging, saying, actually, I can now see the vision clearer. I got one of the companies I work with, and listening to the founder talk about his company now when he stands on stage and he presents it. And he opens with, I have a vision, and he really does have a vision. And thinking back to almost 5 years ago now when we first had a conversation, he actually didn't really have a vision and didn't know how to talk about the company. And now you see he's not just doing it because he's been told. He's now doing it because he actually believes in it.
Yeah.
And just that little thing that he's doing, you can just see that he actually got strong conviction about what he's doing now. And before it was just an idea.
Yeah. And I think where you said in one of the earlier episodes that there's a lot of pressure put on founders, and they're expected just to turn up and deliver, and everything's great, but actually people don't really see the hardship of what goes on behind starting a company.
Yeah, no, it's one of the things that if I go back to like my time as CFO at Deliveroo, it's awesome. You're one of those, you get invited to all the wrong parties.
Yeah.
Right? It's kind of like you just do, right, by association. And you'd go around and almost you get this like look of like unbelievable admiration because of the job you do and the job title. Yeah. And my view is always, guys, I can take none of the credit. Right? I just turned up and I'm doing a job like most of us here. It's the founders that have to take all of the credit. Because without the founders, firstly, you don't have a job. There's no job without a founder.
Yeah.
And they're the ones that decide to get out of their corporate life, to walk away from a paycheck, and say, you know what, I'm going to go and start something. I'm going to go and take that risk and go out on my own or with a group of people. And we forget that when we're sitting around complaining about, oh, it's not great here, it's not great here. No, I'm not enjoying it, I'm not paid enough, I'm not recognized enough. Okay, well, go and start something, and you'll see just how hard it is. And so it's a really tough journey.
So what's next for you?
Oh, I mean, after I finish this?
After you finish your journey.
No, it's...
still investing, I mean, you invest in quite a lot of startups, don't you, as well?
Yeah, there's I was chatting with a buddy of mine actually yesterday, and there's very different theories around investing. So my preference is I like to go into companies where I can get a little bit more hands-on.
Yeah.
And I enjoy that. There's another thesis, which is when you're early, you just go as many companies as you can.
Yeah.
As in you want a large portfolio, and you play more of the numbers game that, from a financial point of view, that will work out. And so I think that I prefer the journey that I've taken. No, it's my preference. And so I think I'll just keep on doing it.
Yeah.
The joy is that the challenge is always that how do you do it at scale? So everyone always has limited resources, but as you can start to change that resource structure, if you can do things well and keep on doing them and repeat it, you can do it either at a bigger scale or more of it, and have a bigger impact. So I think that I like the things that I choose. I think that I like the impact the companies I'm working with will have. And therefore, if they're successful, then you measure that impact on the world and say, well, I played a part in that.
Definitely.
And if they're successful, then that should give some financial return. And then you just go again. You go back to go, right? You collect your £200, you go back to go, and you say, I'm off. Like, let's go and do this again. This time let's try and get Mayfair and build a hotel. Why not, right? It's,
Monopoly.
yeah, exactly. It's like that's basically what it is, right? You just keep on going and keep on trying to do as much as you can to, but you're not winning for yourself. You're hopefully trying to win for everybody.
I find that sort of after the whole COVID thing, well, not after, we're still in it, but there's more people now that are open to trying new things and open to starting
You to make yourself.
a business. Me and so many other people.
Yeah.
So many other people. And I think, I don't know, like the future of entrepreneurs, people are more brave now. People are getting more brave, and I love that.
Yeah.
I mean, it's not for everyone because it's an awful lot of stress, but the highs are really high, and it's great to create something new, right?
Yes.
So, advice time for our lovely audience and the people watching. What are the do's and don'ts of a startup? What should they do and not do?
Yeah. Well, so I mean, I'd start with the don't. I think, right, is that don't be too precious about it. It is going to be a hard journey. And so I think that you can't be too precious about it. There's going to get bumps and bruises along the way. That's just part of that journey. So you have to just suck it up and be ready to listen and learn through the process. I think that ego generally will make it harder.
Yeah.
So I think leaving your ego at the door when you start it, and saying, okay, I'm going on this. I'm gonna. I don't know it. I don't know a lot about this yet, but I'm going to learn along the way. I think that's really important. That doesn't mean that you have to be embarrassed about what you're doing. I think you need to be proud of what you're trying to do.
Yeah.
I think you have to have a lot of strength of character to say, I'm doing this for these reasons. I know why I'm doing it, and they'll build over time and they'll shape. Make sure that the people you're bringing along the journey, you know why you're bringing them along.
Yeah.
And constantly remind yourself of that. I think that there'll be people who will join you on the journey who might be useful for a part of that journey, and not the whole journey. And I think that's really important to recognize, the roles that people will play, because firstly, it's going to be a long journey.
Yeah.
And don't expect everybody's going to be able to go the whole way with you. But recognize the value they can add, the time they can come there, and also then don't resent them for not going the whole way with you either, right? Because that can tear you up.
Yeah.
It's like actually value the contribution that they're making to the journey, but they're part of getting you there. They're not necessarily going to be the whole way with you, and that's okay.
Yeah.
Also, I think knowing when to give up, when to step out. A lot of times, you know what? Actually, there's a point where somebody else is better to take that company forward than you.
It's a good point, actually.
Yeah.
Yeah. To know that it's okay to hand it over to someone.
Yes.
It's got to be quite difficult, though, isn't it? For
Yeah.
some. Maybe not for others, but for some people that must be quite difficult, especially if they're a bit of a control freak.
Yeah, well, and a lot. It's true, right? It is a tough one, right? Is that I've got some founders. It's like they've some of them are second-time founders, and they exited the first company and they didn't like how that went when they handed it over in the process, and they've learned from that and said, actually, no, like I value, like valuing who you let onto the cap table is really important.
Yeah.
And I think that I mean, I know you've done a session around dating, right? It's in many ways no different, right? Is that you're meeting people on their best behavior, but you'll find out about them when things get really tough.
Yeah.
And I think that's true with investors. It's when you're raising the capital and everything's great, it's like the relationship's wonderful, but it's in those tough moments where you're going to find out that they really have my back.
Yeah.
Are they people that I can count on? And I think it's in those moments that you get the strength of your investors. So I think that a lot of people when talking about like, do you get investors, do you not? I think if you are getting investors, remember that it's a two-way conversation.
Yeah.
Because it can get pretty tough if you get the wrong investors in. So that's a really important part of it.
Yeah. I think they need to be able to bring something to the table as well, right? I mean, well, some people think no, they just want an investor.
Yeah.
They don't want their knowledge and I suppose it's personal choice, but I think I would want someone that could add value.
Yes.
Absolutely, but
yeah, and I think we got
everyone's
into this
different.
like and I do say ridiculous, right? This like excitement around what valuation every single company gets, right? Well, I mean, the valuation is just a process of allowing you to get capital in for a certain percentage of the company. But like, that's not, the valuation is not the success, right?
No.
It's like, it's just a process of raising capital. And somebody said, at this moment in time, we're putting a value on your company of this.
Yeah, well,
That's not the success metric.
I meant bringing in value in terms of their network or that they have an expertise within that industry.
Yeah.
For me, that would be really important, I think.
Yes. Yeah, and you see that, I think the good investors do that, right? They're cheerleaders, right? But they're also people who will tell you when things are not going well. And they'll point it out to you. You want that honesty. You want that
Definitely.
You want that honesty, but also supportive honesty. I think is probably the right way of doing it. They've got your back, right? But they'll also tell you like, actually, this is you're not doing it the right way, or we don't think you are. And you want that hard conversation.
Yeah, you do. Honesty.
Yeah, and speed, right?
Yeah.
I think a lot of it comes down to the worst form I saw was one of the companies that was struggling, and the investor base was just delaying any decision, which is no decision is even worse than getting to a fast no is always, at least it's a fast no, because then you can work around it. But getting to a maybe is like, what do I do with a maybe?
Yeah. Cool.
Yeah, it's like maybe. So it's not a yes or a no. It's like maybe. That's the hardest part. So you do want that decisiveness.
Yeah, definitely. Because I think people really struggle to just be direct, yes, no.
Yeah. Yeah, and
the middle ground is just, no, it's yucky.
And you can have a conditional yes, right?
Yeah.
Yes, if, right? That's fine. At least you know what you've got to run towards. Or get to a straight no, like, no, we're not going to support this. We're not going to be behind this. I think that leaving people in that indecisive is like, because that creates so much confusion. It's like, I can't really count on you, but, well, can I? I don't really know where I am.
Yeah. Well, I just want to
like
say,
dating again.
Dating.
Yeah.
Business investment is like dating.
It's true. Yeah.
So I will be a fucking pro at this.
Yeah, you're going to like smash it. Yeah.
Cheers.
Cheers.
Thank you. And that was the Proud Talk.